Yo, what's up? 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 You already know what it is. Professor Pippin back in the building, back on these charts, back trying to catch some more pills. Kind of want to make a little quick trade recap before I delete these charts. Slash, this is where experience kicks in. And just show you how I got active based off of my analysis from this weekend. Right now, I see GJ trying to drop, but oh, we're gonna see if we close below 53,744. Got a good potential chance to continue some sales all the way back down and create a new lower low. This will be a new lower high. Um, Pretty much based off the 4 hour, but go ahead and blank this real quick. High, low, lower high, lower low. This could be a new lower low area. Look like a little liquidity grab right here. It's 4 hour charts. So 4, 8, 12, 16, 20, 24. 28, 32 hours trying to push up above the zone. And we have not been able to push above that zone. So definitely we start closing below 53,610 based off of the 4 hour chart. Then based off of the 1 hour chart, potentially confirmation number one, confirmation number two on the 4 hour chart. But 74, 153.744. Potentially could have some shorts create that new low. So let's see what cracking. But based off of earlier this week, I just kind of wanted to reflect and show why I got active this week. I had buys up until this level. I took profit on. And then I had these shorts last night. So um, looking at where I got active on Sunday night, these buys right over here, um, I saw price action open up bullishly from the weekly open. And it wasn't a lot of room to get active, but I knew based off my weekend analysis, there was a potential for a retracement back into these levels at 154.761 for a lower high based off of the higher time frame analysis. So what I saw was as price, came down and retrace, we did not break this level. Number one. Then I saw this big ass engulfing candle right here. Number two, this is on a 15-minute chart. So, if we bump down to the 5 minute, you can see a lot better what I was looking at. So we didn't break these lows, got the big engulfing candle. We started to retrace and started to wick out back into this gray zone. This gray zone is the higher low based off of the daily time frame that pushed us into the highs way back over here. And this higher low was established a few weeks ago. So as we go back in time, we look back over here, that's where I got this gray zone from. This is my higher low based off the daily time frame that puts us into the extreme highs. So as we were down here at this level, let me zoom in for you. Oops, as we look at this level here, like I said, price action came back, retraced, didn't break any lows. And this is on Sunday night market open. Big engulfing candle. Saw price action pull up, push up and pull back and still not breaking any lows. Then we had another low bullish impulse into the highs, breaking these highs and then pull back and did not break these lows. So I had an entry from like right here, stops under there, protecting myself real easy, real greasy. And then I had targets right at the bottom of this zone. And I had this zone based off of this lower high that pushed us into the lows down here. So quick little trade. Let me see if I can pull it up. The preview of where I sent it out to the team. Showing everybody where I got active. So this is it right here. Like I said, as price pushed up, showing not breaking any lows, broke that high, and I got up out, and price got up out of there. But this is the analysis where I dropped down all the thought process on this video here, showing where I thought this was going to get active. And then, you know what I'm saying, this is where I got active and captured profits. But price pushed up and like I said, price pushed up, came back, pushed up again. I was already in trade by that time, but still not breaking any lows, still making higher highs and higher lows based off of the little 15-minute trend to the upside. Like I said, I was looking for it to come way back up here, but then I had targets at that level simply because, this is the last lower high based off of the higher time frame that pushes into the low. So got in and got them up out of there. back into last night. The previous London and NY session, I saw it break below the higher low based off the daily time frame that I showed you a few minutes ago, looking to the left. So when I mark these up, various continuation zones, I'm looking for a break and a retest of that level, potentially get active. So Monday morning London session, Monday morning NY session, and as I got home, I traded Asian session, prices up at that zone. I saw it start to stall out. It didn't completely reach into that zone, but if you look, at the wicks based off the left, it kind of, touched some structure back in over there. So I had my Asian high and my Asian low marked up. Price action had already retested or 50% of my Asian range. Feel about from the high to the low. That 50% fib on. We pulled up to that 50% and exhausted. Didn't close back above that 50%. So that was like my second confirmation. First confirmation was pulling back into the zone and exhausting and not closing back into that range. Second confirmation was allowing my Asian high and low to play out and then seeing which level or which side gets retested. And at this time, the Asian high got retested and didn't close back above the 50. And, as price action came back down and started to get ready to close below some of these lows, I got active to the downside. And just like the first trade, I dropped the second trade in the group chat and showed everybody how I was getting active, what I was looking at. And as it got down here, it started to phase out. One thing I noticed, one thing that helped me stay in the trade and was able to catch those full 40 pips was, let me delete this fields. So based off of previous price action, higher time frame, this is an impulse move back into the highs. So drop the fields on that thing from the low to the high. And what I saw was price came down, pushed back up. This retracement really scared the hell out of me because if you put more levels on your fibs, we came down to that 382, closed below the 382, but real strongly bullishly grew back up out of that thing. And I said, okay, if price action closed back above this Asian low, then, potentially reduce some of the risk, bring the stops down, cut off some of the trade, because potentially this could have been high, that could have been your high low, and then push higher until back into that zone. But it didn't. That Asian low held up for me and it came back down. When it got back down to the 50, we spent several minutes right here trying to break that 50. And I said, okay, well, if my Asian low held up 9 times out of 10, we're gonna break below that 50. So I'm just sitting here on pins and needles waiting to see if, this was potential area for a higher low for it to push back into the highs. And then I was saying to myself, okay, if we start to break some of these lows, we in there like swimwear. Price action broke below those lows, retested the 50, came down again. Actually, it touched my TP2 first, and I, let it run. I took off some profits at TP1 and adjusted the stops about down about right here. And once it came down to this level, I said, I probably should capture some of these profits, because overall, grand scheme of things, you up, 35, 40 pips, full TP was 71 pips, but, I can't be mad at 40 pips. 40 pips is enough, trading the Asian session. So once price pushed back up and hit that 50, then I was like, damn, I should have closed when it hit TP2. So once it came back down, I took some more profits off and I trailed my stops to right here. And then, that's why I got trailed out at, I think it's like 36, 35 pips overall. But if I would have stayed in the trade, TP2 would have got hit again, would have been close to getting stopped out, depending on what the spread would have been looking like down in London. Probably would have got stopped out right there. And then eventually back into the New York session. Go ahead and drag this over. Back into the New York session, I would have got stopped out had I tried to, maintain all the way back down to the full TP. So, like I said, where experience comes in, that, you have to believe in your trade, you have to believe in your setups. And I knew with the break of this Asian low, I had potential to drag that baby all the way back down to the streams or even create a new lower low, which what I'm kind of hoping for, this price action started breaking out and then, push down and create new lower lows. But overall, close below that 382 was was a confidence booster. But then when it came back bullishly back above that 382, oh shit, Press man, about to be acting funny on the brother. So, then it came back down just as strong as it went back up. And then when it started at the 50, I'm still back at that, oh man, here go my stomach bubbling again. So, just sitting back and just watching, just allowing that thing to play out and just believing in the trade is what allowed me to hold to capture those full 35, 36 pips. So overall, that's all I got for the week. 2 trades so far. So we up, pretty good. We had a bad week last week. Wasn't good at all. But this week we're looking good so far. So I'm gonna go ahead and blank these charts and then get back active on GJ. But based off of the weekend analysis, what I want to do is peek back over at some of these other pairs. I don't really trade a lot of these other pairs, but I do mark them up. For UJ, we were looking for price to come back down into this zone if we were going to go back bullish and then start breaking, go back. We're looking for price to come back down into this zone and then start breaking structures, looking left, close above, there's possible buys above zone, pull back and retest, and then get on up out of there and continue to go bullish. But right now, we just kind of fooling around. I think a lot of that is due to the news. We got big news set to play out tomorrow for the USD. So if you trade UJ, be careful. They do like to pump fake about 10 pips above extremes or below extremes. So I could see price action, pump faking down here, trapping in some sellers, making it look like he's going to continue this bullish trend and then bam, wham, jammy back up to the upside. So price overall is bearish. For the last 3 weeks, 1 week, 2 weeks, 3 weeks, we've been bearish. Right now, we're pretty much consolidating. So pretty much still waiting on UJ. GU played out like a fat rat. I did not catch any of these. Potentially, this move can come back down and still stall out at this bearish continuation zone. And like I said, bearish continuation zone, continuation sell zones, sell below are all break and retest setup ideas. So price has broken through and showed you where it wanted to go. Not a big enough retracement for the most part, but based off the analysis, this bearish one is playing out. Over the AU, continuation sell zone did play out. We would have allowed price action to push below this zone. And then the actual trade would have been with this big wick right here. Would have been set up with sell limits sell limits from right here. Price action would have pushed down good 40, 45, 50 pips. That's enough to call it a day. But just like on GU, you got this impulse to the downside. And like I was saying, one of the things that I was seeing that, stall out of the 382, stall out of the 50, and then, push back higher for new higher highs and higher lows. So that was one of the things, like I said, with GJ, was one of the things I was watching out for last night in that trade. But overall, analysis is cracking. Analysis is looking good, but it is midweek. Tuesday is where a lot of people get faked out, and then you got the trend continuation into Wednesday. Let me see. Based on the high time frame, we'll blank all that. Higher highs and higher lows. High low, potential lower high, break of structure over here, lower low. So potentially looking for a lower high based off of AU for it to continue bearishly. What I would do in this situation is drag that field. It's a 4-hour chart from top to the bottom. And then I would see how it react from the 50. If we get from the 50, we come back down and start breaking structures. I would look for, depends on where it goes or how it reacts. But a lot of it is just sitting back and let price action play out and show you what it want to do. Let me delete this field so we ain't so confused. Yeah, right now we're starting out at 382. We have already rigged through the 382. So for buys, I wouldn't necessarily suggest buys, but close above that 382, probably pushing to the 50. Could catch a quick little scalp from there. Let's see. 21 pips, risky 21 pips, but it is what it is. For the sales, I would like to see it exhaust at the 50. Got a potential little order block right here. This is a 4-hour chart too. So we came at one time and grabbed some orders. It wasn't enough to break structure. So if we push up into that zone again, potentially, if we don't get a break of structure, then it's probably going to continue bullish. So just keep an eye out for that. For the most part, that's pretty much it. Let me see what I have for DXY. DXY pretty much playing out. We had a break above this structure, continuation buys, say break above, retest, and get back active to the top side. Right now, would have took this trade, would have hit we're looking at like 39 ticks. So yeah, analysis from the weekend ain't bad. I know a lot of people don't like to analyze from the weekend and then trade throughout the week, but for me, for the most part, I mark up these zones, mark up these areas, and they play out. You just got to be at the charts to catch them. So no rushing. Take your time, read the charts, analyze. If you got questions, holler at your boy. I'm reachable for right now. These are my tags, social medias, whatever you want to call it. Telegram, Student Pips, Facebook, Paul Pipich, Instagram, Professor Pipich, Twitter, Professor Pipich, and then on YouTube, where this video will be, University of Pipich. Holla at your boy. I'm out.